Hey guys, just what I'm seeing this morning here in the markets. I have a doctor's appointment this afternoon, so I'm done by 10 o'clock anyway. I just do research the rest of the day. That's kind of my model. And Toss was giving us all kinds of troubles this morning. The volumes weren't even that bad this morning, so I tried to get canopy growth with the room, and it came into my price. I was getting it uh, uh, on the ask even. I was trying to fill to buy, and it sat there for 10 minutes. I just finally canceled it. I watched canopy growth completely blow out of my price range, so really got me upset with Toss. But basically, what we're seeing right now, we have the Qs up into my resistance. Basically, we broke down out of this level and we're running into resistance right now. I do not think we're going to get much of any more upside in the Qs. The highs for the session are probably at or near in for the day. I am actually expecting sideways consolidation. Maybe into the close we get a rally, but for the most part, the rest of the day, I'm kind of expecting sideways consolidation in this uh, uh, in the Nasdaq. And what validates my concern, we do have a prior volume point of control, weekly volume point of control. So basically, 2 weeks ago, the accepted value for price was at this price point, and we have had a devastating move in the markets for most of the sectors. The Qs are one that are still positive for the year, so they're not actually wanting to throw in the towel yet for the Qs. But a large percentage of the sectors have turned red for the year. So just keep that in mind. If you're a fund manager or if you're an investor and you bought in this in January, you got red P&L going into these earnings that are already up. These stocks are already up almost 100% since the last quarter. So just keep that in mind. As investors, the swing traders are and position traders. They're actually likely starting to rethink their long positioning with some red P&Ls hitting them for the 2020 trading year. So just something to keep in mind going forward here. But that's why I'm kind of thinking we're just going to go sideways here on the we do have value at this price point. And if you go out on your monthly webs, you can see we're building out value at these higher price points. But this is our January. This is all of our January. This here was value for the end of 2019. We were supposed to be trading down here to start to be in value for 2020. This is the area we should have been trading in. But instead, we had a massive gap up for January on our Qs. Very, very bullish activity. So just keep that in mind, knowing this situation, and if they decide to sell the news, which I'm not saying they will, this morning the Qs are getting a real juice here. Apple came out saying they wanted to raise production by 10% in the face of this coronavirus over in China. And, it's kind of goosing the whole technology sector, hearing a production increases here into major earnings tonight. So just keep that in mind. When a stock is up, like you're seeing here in Apple, which I'm not. I really don't want to be overly bearish on Apple, but whenever you see Apple, let's go here on daily. Okay. Here's last earnings. You're at 244. We're at 315. We're up $60 on Apple, and that is a massive, 30% gain on the biggest company in the world. It kind of makes you want, and the value even on Apple was down here. We had higher value, but we were well above that value. Okay, so it kind of resembles a Head and Shoulders potential top here. I mean, that's just something what I'm looking at. Thank goodness the value has been put in at the top of the range, but keep in mind the news hasn't been released yet. So this can be deceiving, seeing all this, everybody and their brother buying in up here, not even seeing the earnings results yet. So Do I think Apple's could do very well? Yes, I do. I totally agree with that. But just remember where we've come from and where the value should have been for the year, and we just completely all the bulls piled into this stock coming into the earnings, and a lot of times that means they start taking profits. If they come in with social numbers, they're just going to be taking profits. Not necessarily a bearish thing. It's just something typically happens in a normalized market, which I can't say that we're actually in a normalized market at all. So just something to keep in mind. Your ES on the daily. See, I actually had saved. Let me go over here on maybe a SPY. We actually dipped negative for the year on our SPY yesterday. Yeah, I did. I put the right line on there. For a short time yesterday, we actually closed right on the break even for the year on the S&P 500. And yes, we are catching a short squeeze today. But just I want to point out here, prices at lower than that. If we were going negative on the year, then you're going to actually start seeing the position traders starting to take their positions off. So thank goodness the SPY is catching a short squeeze today. It's just keep that in mind that we came right to the cusp of a significant correction here in the markets. So the trend is up, and you got to stay with the trend as long as it stays up. But that is something just important to note how dangerous the situation we just approached. Okay. Okay, our rut is still negative on the year, Russell, and we're not even back testing the 20 SMA yet. So keep that one in mind here. Values being accepted at lower prices, lower than the close of last year for the Russell. And we're even building out value below the close of last year. So just keep that in mind that the Russells, it's kind of going sideways here at last year's close. But underperforming here. And, this is one of our growth sectors. So keep that in mind that when you don't really want to see your growth sector, one of your primary growth sectors fading or lagging the markets. You want to see them as a leadership, and we're not actually seeing that. So the combination of the weak energy sector and the weak regional banks are the two things that really are impacting this sector. What I liked about yesterday, the financials came right down to my support level, and in the face of a very strong VIX and a very strong bond market, the financials were actually rallying most of the day yesterday. They were holding their own in the face of that context. So I was pretty confident we were going to get a short squeeze into the opening today, which that's what we got. And it was quite refreshing to see that kind of move. But look at the volume so far today. They're just very, very anemic. And when you see real low volumes like this, here we are 11:30 in the day, that it indemnifies short squeeze, and which it can go all the way back up to the top. The white line is the opening for the year 2020. So anybody who's long financials so far this year, the swing traders, the position traders, they are really taking on the chin here in the financials. So just keep that generalization in the back of your mind here. A lot of us are, day traders. We don't really think about the longer term picture, but you have to keep it in the back of your mind that the longer term investors are they going to continue to buy if they're red for the year in the weak sectors. And you got your XLE just getting completely devastated. Look at how much, if you would have bought in at the end of the last year, just look how much you got just creamed if you held positions in the energy sector. And you would have thought energy on a short squeeze would have caught a significant short squeeze today. Instead it's just kind of hanging out down here at the lows. So that's another thing to keep on your watch here. You know, they've just pretty much thrown in the towel on the energy sector so far here. So um, just keep that one. Lower lows seem likely, especially here at the first of the year. I mean, why would you want to buy in here at the first of the year when all it's shown so far is losing P&Ls? And that's the situation we're seeing here in the energy sector. Industrials, we did have an uptick in uh, defense spending today, and I think a lot of it had to do with the whole Iran thing, and it pumped up the defense side of our spending in the markets. We are getting a little bit of a responsive buy in the industrials. 3M came in and disappointing numbers, selling off hard on the numbers, and that is a major industrial. So that is something to keep in mind. We're barely holding above the break even for the year on the industrials here. Post some pretty lousy numbers out of 3M. So I just wanted to keep that on your watch here that 3M does not seem to be wanting to hold at these higher price levels. So just keep that one in mind. So the story today is the technology, because we got all those things. Look at them. Look at how XLK, you got a nice little bit in it. It's positive on the day, and a lot of these sectors are not that way. Your SMH, which is technology, positive on the day. Got AMD reporting overnight. They are bidding up technology, but they aren't bidding up anything else. So just keep that in mind. It looks like we just finally turned positive on some of this stuff, or on the bids and asks. So they're kind of that's the bid and ask. I'm sorry, but yeah, we're positive on everything, but just something to keep in mind here. They're trying to keep a sustained bid in our technology space, and like I said, the semiconductors are coming off of significant resistance, in my opinion, and we are outside the primary channel. So basically, any type of numbers coming out of AMD, they've just got to completely rock, and we will be moving into the parabolic stage of the market, which we had back in the tech bubble. So that's kind of what the market makers are trying to push for, is this parabolic move in the semiconductors, and that's the point to where we're at right now. The normalized trading flow was down through in this range, and they are preparing for the massive acceleration in upside performance in the technology space, and that's what they are trying their best to push for. And something that is a change of character, and with the whole China thing being shut down for weeks, maybe a month, you have to really wonder if it's wise to be pushing into a change of alpha, trying to push into a higher alpha environment under the current market conditions. Okay, XRT, look at that, it's lagging again. It's coming right up, but it's still lagging. We're still lagging in our retail, and we have Amazon reporting later this week. So it's up, but it's not up very well. So it's not. Still inside of yesterday's candle, actually. So keep that one in mind. XLC, and that's your telecommunications. It's up, but the news came out today. Britain is one of the first. They're allowing Huawei. They're going to start buying Huawei products for the G3 or G5. Is that G5? It's the new phone network. I think it's called G5, and they're going to start buying Huawei products. They just want cheaper products. Huawei sells their products a lot cheaper, but it's that's just as good. But they are going to start allowing Huawei into Britain their products, so they can build out their infrastructure at lower cost prices. So that's something to be concerned about, that the introduction of another major competitor into the 5G, that's what it's called, 5G space, and that could have an impact on a lot of these stocks that are currently um, really rallying hard in that sector. Okay, and let's check out our TLT. Bonds seem to be coming in today. As far as I'm concerned, I still think the bonds this week want to tag to 145.37. So still have a bearish take on the markets going into these numbers. I'm actually thinking they are going to sell the news tomorrow. That is my bias. I got to stick with it, knowing that where prices seem to be wanting to go. Same way with gold. Gold was catching a bid. I think gold is wanting to go up to the 1630 area. It started to break out. It's coming back in today. Typically, what you do, you see a breakout, back test for a continuation move higher. It may or may not do that, but that is kind of my theory. What's going on here? It's the risk off trade, and then even on the VIX. Let's see here. Oh, I had that the other day. Or is it VXX maybe? No. No, I had that the other day. What the heck? Oh, VX. There we go. Okay, we got the VIX really coming in today on this short squeeze. Okay, but I really thought the VIX was going to be tagging this untested VPOC, the VIX futures, and we didn't quite reach that. So, seeing how history has gone, I'm still leaning that the markets still want to sell off lower. And keep in mind the SPY, to finish it out, 2 weeks ago, we did the market maker move. Well, let me show you here. Okay, 2 weeks ago, get this settled up here. 2 weeks ago, we did the market maker move. We broke to the high side. It'd been like that. Oh man, I can't remember. It was like 27 weeks or something like that. We were trading within the market maker move. Well, we broke to the upside on the market maker move, and in so doing, we tagged my critical resistance on the S&Ps. Okay, and I think we broke it right here. Yeah, and then we opened the next week tagging my critical resistance, and then we broke it to the downside, the S&P market maker move. And then this week, we're already tagging the lows of the market maker move as of yesterday. We tagged the lows, and then we got a responsive buy as of today in the market maker moves. So just keep that in mind. We are pushing the market maker move to the downside. We've got a change of character all the way up. We were pushing it to the upside. And now we got those earnings coming out tonight. So it's anybody's guess what could happen. We could just be chopping sideways after these numbers come out. But my bias is still that I still think that we are trying to push to the downside for a bigger test. And what the 2020 Open is acting as support on the SPY so far. And we'll see what happens. But I do think we're going to have really good numbers for the most part this earnings season. I've got keeping a very close eye with all the 5G build out. I kind of think Xilinx is going to dramatically outperform going into earnings, and I'm thinking the 105 area for tomorrow. This is the overnight. We're going to have Huawei reporting. I do think Huawei's is potentially undervalued here, considering their exposure to the 5G network. We'll see what happens in the markets. Nobody's really covering it, and you're not really hearing any analysts upgrades or downgrades. But in my opinion, if the markets are as bullish as they say they are, you would think stocks like Huawei or like Xilinx should be trading at least in the middle of their trading ranges. They shouldn't be down here near the lows of their trading ranges. This is one of those stocks that actually should be trading well here, and I'm concerned. Why is this thing trading so bad in such a bullish tape? So just keep that in mind as a possible trade for the overnight. If you do earnings, that will be my one that I would want to take to the bullish side if you're a bullish this market. But I am really concerned here that they are preparing to sell, take some profits off the table, and because the only thing holding really holding the markets up um, for the 2020 gains, that is the technology and the semiconductors. So just keep that in mind. And oh yeah, AMD is reporting tonight, and man, look at this massive move. This thing has come from $32 and now it's trading $50. That is one humongous move for a semiconductor stock. So, and I haven't heard any things about them having pricing power in their chips. So typically you hear them talking about like Nvidia. They were selling their Nvidia for 2 times what the offer price was whenever the Bitcoin bubble was going on. And that's the type of information you want to hear to justify big mega moves like this in AMD or in semiconductors. So just keep that in mind. I just think tech is going to be on a sell tomorrow, but I've been wrong before. And well, that's just my ideas, and hopefully they help you guys out. And I will see you tomorrow.